Hey everybody, Marty Mazorra. I want to talk to you for a few minutes this morning about currency manipulation. This is very much part of the political narrative these days. Mitt Romney has made it part of his platform with regard to China. Was listening to a conversation a couple days ago between Larry Kudlow, an economist and talk show host, and Tim Pawlenty, once candidate, now big promoter of Mitt Romney. Mr. Kudlow broached the currency manipulation topic and asked about Romney's stance. Romney says that if he becomes president early on, he's going to label China a currency manipulator and I guess take appropriate actions. Kudlow had offered doubt as to whether they are indeed manipulating their currency for trade purposes. Pawlenty snapped back with words to the effect of course they are, everybody knows it, and it's time they're held accountable. So what I want to do this morning is just talk to you about what that means, how a country, were it so inclined, would indeed devalue its currency, and why would it do that? And let's use China and the U.S., of course, as our examples. If China were in the business of devaluing its currency to gain a trade advantage, it could simply do that by having the Chinese central bank print more currency and then exchange it for U.S. dollars, essentially sell its own currency and buy the dollar, pushing the dollar up and the yuan down. Yesterday, the price was 6.32 yuan. I say yuan versus renminbi, which is what it is also known as, and obviously you can see why I'm using yuan in this illustration. 6.32 per dollar. If China were to successfully devalue that to, let's say, 7 yuan per dollar, who benefits? Who benefits from the dollar now being stronger versus the currency? Well, for starters, quite frankly, the U.S. consumer benefits. The consumer, who is quite the consumer of Chinese goods, then gets more for his and her money, more stuff, if you will, from China, or doesn't need to spend as much money to get the same quantity of stuff, and then ends up with discretionary dollars with which to spend in other places in the U.S. But who does it hurt? Now again, I'll get to what everybody understands, but I'll give you the less obvious. So I talk about it benefiting the U.S. consumer and it hurting the Chinese consumer, very much like my subsidies illustration from the other day, because now the Chinese consumer doesn't get as much for his or her money. It takes more of his currency to make up a foreign currency. So to the extent that the Chinese consumer would like to enjoy foreign products, they get to enjoy less of it if their government is indeed devaluing its currency. Which brings us to the U.S. exporter who wants to send or sell stuff to the Chinese consumer, and that's where the cheating comes from, because there's less currency, less purchasing power, therefore less U.S. stuff getting sold. Bad for exporters, bad for jobs in those industries. And then, of course, you could argue, as I have in the past, that it's although good up here for jobs in the industries that capture the discretionary monies, but we've done those illustrations before. I hope that helps you understand, just real briefly, how it's done and why it might be done. Doesn't necessarily suggest that it's always a good idea when you consider the home currency's impact on that country's consumer. But I want to talk about, just briefly now, why I was inspired to give you this illustration today. It was an article that I read a couple days ago about Japan. And Japan is a currency manipulator by its own admission. And my thought was, wow, how is it that Japan is just basically promising the world that it will intervene big time to keep its currency low, and we're not going crazy over them like we are China. Well, the Japanese, to give you an example, last October, they literally sold 8 trillion yen to try to force the value down, and another trillion in November. So again, and they've said basically that they are not going to allow the yen to appreciate any further because they believe it'll do real damage to their export economy. Now, Japanese history of the last couple decades, or Japan's history, does not really support the idea that you can devalue your way out of your problems, but nonetheless, that's where they are. But again, my whole point is, isn't it interesting how that is just literally, again, outwardly expressed, and we don't have anything to say about it. Well, the target, I suppose, is very much on China. It's very politically expedient today. That's the narrative. And we do have a substantially larger merchandise trade deficit with China. If you want to know my thoughts on that, go back to my previous finger paintings on free trade. So, okay, so let's talk again about the Chinese yuan, and let's talk about in the context of the last 5 years and see what's been going on. In 2007, it took 7 3/4 yuan to make a dollar. Okay. Interestingly, we've been all over them to stop devaluing their currency, but if you compare 2007 to 2012, the yuan has actually risen in value versus the dollar, to the tune of about 18% if you look at the difference between those two numbers. But apparently it hasn't risen enough. I don't know how they could do a calculation, but quote-unquote experts say that the yuan is 40% undervalued at this point. But let's talk now about how China has indeed the truth about what they've been doing with their currency, actually all the way back, a dozen or more years to the Asian currency crisis of the 90s. Which was quite the crisis indeed. Immediately following that, China decided to peg the yuan to the dollar, so that as the dollar went, so went the yuan. Essentially, the Chinese central bank would buy and sell yuan to keep it in lockstep with the movements of the U.S. dollar. Okay. And they continued to do that all the way until about the year 2005, and I suspect bowing to political pressure, they allowed it to float a bit, and to a tune of a few percentage points. What immediately happened is the yuan spiked up about 20% against the dollar, so it should have made U.S. officials very happy at that point. But apparently not enough. So the question is, though, was this peg all about bringing an unfair trade advantage to China, or providing some market assurance or stability or confidence in terms of currency fluctuations? Could have been either. Could have been a little bit of both. But China is, unlike Japan, very closed-mouthed about what and why in terms of the whats and whys, I guess, in terms of currency valuations. Now, we can't have this discussion without coming home and talking about the U.S. If indeed large quantities, or the printing of large quantity of money drives down the value of currency, you have to ask yourself, what are we doing here in the U.S. with these quantitative easing programs to the tune of trillions? Indeed, the Fed officials would tell you that they are all for stable to stronger dollar policy, but if actions speak louder than words, in practice, they are all about a weak dollar policy, or they have been of late. And you've seen what happens to asset prices. Now, there's going to be an inverse relationship or a negative correlation between commodities prices and the dollar. As a currency gets weaker, then assets denominated in that currency are going to go up in price, of course. That's inflation. But we've actually been seeing it of late in the stock market. I've been talking about this consistently for the last couple of years, that there's this negative correlation that when the dollar goes down, stock prices go up. And again, U.S. exports would be why, and the S&P 500 is basically made up of multinational companies that would do well, presumably in a lower currency environment now. But remember, the U.S. consumer, though, is 2/3 of the U.S. economy, so ultimately this probably isn't a great thing, if you will. And I think we will see ourselves get back to the days that a stable currency, even a stronger currency, is good for the local market. And but again, for now, clearly there is this negative correlation. And folks, I think I'll just close here with stating that when we're talking currency manipulation, I guess it is ultimately all in the eye of the beholder. Thanks for watching, and have a great day, and I'll catch you later. Bye-bye.